Hello and a very warm welcome to Policy Watch, where we discuss major economic events over the last week. I am Paranjoy Guha Thakurta, and today we're going to discuss the fallout of the rupee and its implications, the finance minister's promise of more reforms, and the upgrade of India's sovereign rating by Fitch. To discuss all these issues, I'm very happy to welcome to the studio of Rajya Sabha Television, Professor N.R. Bhanumurthy. He's a professor at the NIPFP, which is an acronym for the National Institute of Public Finance and Policy. Before we begin, let's have a look at the top story.
The rupee touched historic low levels this week when it kissed the 59 mark against the dollar on Tuesday. Economists expect the rupee to slump further to around 60 against the dollar. A sharp depreciation in the currency would inflate India's import bill and widen the trade balance. However, the government insists there is no reason to worry.
There is concern about the rupee. All countries with a large current account deficit have taken a hit on their currency. But that does not mean the rupee will continue to depreciate. The rupee will find its level. We are concerned about the volatility. I think steps are being taken to ensure that there's no volatility, but the rupee will find its level. And it's quite possible that the rupee will regain some of the losses it has suffered in the last few days.
The government hopes that the fall in crude prices would make up for the weak rupee in the long run. The finance minister is confident that he can finance India's current account deficit, which is expected to be close to $200 billion. The rupee closed at 57.51 against the US dollar on Friday. The weak rupee has fueled fears of capital outflows, costlier imports, inflation risks, and bloating current account deficit. Now, investors are waiting for the monetary policy statement on June 17th to provide some direction to the market. Bureau Report, Rajya Sabha TV.
Professor Bhanumurthy, it is generally believed that one of the main reasons for the depreciation in the value of the rupee vis-a-vis the US dollar is a high current account deficit on our balance of payments. And the current account deficit is the difference between the inflows of foreign currency and the outgo of foreign currency. But everybody was taken aback by this sudden volatility. We know that India's current account deficit had has touched a record level of 6.7% of GDP, but that's for the quarter ending December. How do you explain the sudden volatility and the sudden depreciation?
I think this only partially explains the depreciation in the rupee. I think there is a different story. There is a equally important story that's happening in the international financial markets. The developments in the US, particularly the statements coming from Chairman Ben Bernanke, there is a huge confusion, I would say. There is some kind of ambiguity in the overall financial markets. The kind of future path that they are going to take. I think there is so much of dependency on the June 18th meeting. One of the reasons is that there is a flight of capital back to US Treasury.
You have rightly pointed out that the currencies of all the major emerging economies have depreciated vis-a-vis the dollar. But the depreciation, as far as India is concerned, has been more. So, other than the external circumstances, would you say there's also certain internal reasons why the rupee has sharply depreciated?
Yeah, there could be some kind of internal reasons, particularly the pressure is coming from the current account balance, as you rightly point out. That is one side of the story. I think there is also some kind of speculation. Some people are really hedging on the US dollar at the moment. As I said, 17th, 18th is going to really going to be a big days for the financial market. 17th, the RBI credit policy, and the 18th, the Federal Reserve meeting. The outcome of these two meetings will definitely have a significant impact on the future.
Professor Bhanumurthy, when you look at one of the major reasons why India's current account deficit is as high as it is because we have a high trade deficit. Now, you would assume that because of the depreciation in the value of the rupee, Indian exports would become cheaper and therefore more competitive. But today you have a situation where you have a double dip recession in Western Europe, and the markets for India's traditional exports, garments, textiles, gems and jewelry, handicrafts, polished diamonds, processed foods, has either shrunk or disappeared.
No, I do believe that the first part of the story, that exchange rate pushing our exports, not really based on the empirics. In fact, I did a recently study on whether the weak exchange rate matter for manufacturing exports. It doesn't really support the argument that the weak rupee pushes your exports. But what we are arguing is that it is more of import-led export growth hypothesis which is holding in the Indian trade sector.
Okay, so if you now look at the imports
Yes.
of this country, the depreciation of the rupee actually increases our import costs.
Right.
So we are importing inflation too, because
Yes.
80% of our
Yes.
total requirements
Yes.
of crude oil are being imported.
Yes.
We are also importing gold in large quantities, despite the finance minister dissuading people from importing gold. So this means that if your price of crude oil goes up, there's pressure on the Indian public sector oil companies like Indian Oil Corporation, Bharat Petroleum, and Hindustan Petroleum to increase the prices of
Already there's
petroleum
an
products.
estimation that the under-recoveries have been gone up by 20,000 crore. Instead of 1 lakh crore that the finance minister talking about. Now I think because of the depreciation, already there is a escalation in the under
So
recoveries.
if there's creeping increase in prices of, say, diesel, as has been taking place in the
Yes.
recent past, and diesel being an universal intermediate, it enters into
Right.
the transportation chain
Right.
of a wide range of articles of mass
Right.
consumption, this would add to inflationary pressures?
Yes, I mean there is definitely, although the current inflation is coming down, but in the recent period, for the past 2 weeks, the inflation expectations must be going up because of depreciation in the exchange rate. So I'm sure on 17th, the governor would actually look at the inflation expectations rather than the kind of trend that we are seeing.
One of the reasons why Indians are investing in gold such a lot is because it's perceived to be a hedge against inflation.
Yes.
So, in some ways, have we entered into a kind of a vicious cycle?
Yes.
Low growth, high inflation, investments in gold, adding to the current account deficit, depreciation of the rupee, adding to import costs. So we seem to be going around
There is
in a
one
vicious
way
cycle.
one can break this chain is bringing down your fiscal deficit. I think that is something has been attempted to some extent. But my concern is that the reduction in fiscal deficit is largely on the capital expenditure. That is some concern that we might get into this vicious circle for some more time until unless we cut the revenue deficit in a big way than what we have seen in the fiscal.
That is easier said than done in a year where, you're going to have elections in the near future. The government wants to enact a food security bill. So there are a lot of pressures to spend more.
No, Paranjoy, I think one needs to compliment the government on this aspect. This is the one unusual pre-election budget that we have seen for the past at least for 6-7 elections. And this is, one would have expected that this particular year you would have seen more SOPs coming up. But we didn't get into that kind of cycle in the budget.
Okay. So what the impact would be on the economy and on politics, time alone will tell. Yes. Professor Bhanumurthy will discuss the issue of gold and purchases of gold and imports of gold in slightly greater detail. We have a story,
right.
But it's time we need to take a short break in our program, and we'll be back with you in a short while from now. We have more stories and we'll discuss a number of important issues. Keep watching Policy Watch. Welcome back. You're watching Policy Watch. We are in conversation with Professor N.R. Bhanumurthy of the National Institute of Public Finance and Policy. Let's move on to our next story. Finance Minister P. Chidambaram has promised more reforms, further steps to boost the inflow of foreign investments. He has promised clarity on the government's policies on pricing of resources like coal and gas. Here's a report.
Finance Minister P. Chidambaram said market regulator SEBI would finalize the foreign investment norms by June 25th. The government would also take a decision on a proposal to remove ceiling on foreign direct investment in various sectors, including defense.
The following issues will be resolved before the end of June. Firstly, on coal pricing and coal allocation to power plants. Secondly, gas pricing. Thirdly, on FDI limits.
The finance minister expressed concern over the performance of coal, natural gas and fertilizer sectors that registered negative growth in the last 3 years. He said he would resolve pricing and other regulatory issues in these sectors. Chidambaram tried to allay concerns over a sharp decline in Indian currency. He said currencies of all the countries with large current account deficits have taken a hit. The FM urged Indian investors to stop buying gold for some time to help the government to manage the current account deficit.
Please resist the temptation to buy gold. And we can have it for 6 months, 1 year. Almost minimal gold imports into the country, it will dramatically change the situation of the current account deficit. And you will see its positive impact on every other index that measures the economy.
The minister also ruled out further duty hikes to curb gold imports. Government is also working to speed up clearance for important projects in the private sector. He hoped that at least 30 to 40 important projects will be cleared this month. Nearly 250 private projects are stuck due to regulatory issues affecting investor sentiment. With Krishnanand Tripathi in Delhi, Bureau reports for Rajya Sabha TV.
Welcome back to our conversation with Professor Bhanumurthy. Let's look at some of the points that the Finance Minister raised. This issue of the regulatory, improving the regulatory mechanism, the pricing of coal, the pricing of gas, these have become highly contentious.
Right.
We have a coal gate scam. We have the Petroleum Minister, Mr. Veerappa Moily, and Member of Parliament belonging to the Communist Party of India, Mr. Gurudas Dasgupta, engaging in a rather, acrimonious slanging match, a verbal slanging match on what should be the price of gas from the Krishna Godavari basin. And we also have a land acquisition bill which is hanging in Parliament, and that could be one of the reasons why many projects have been delayed.
Right.
No, but let's stick for the issue of this pricing of coal and gas. Do you expect that by the end of, within the next few weeks, these issues would get resolved?
So the fact of the matter is the government did not really consider coal as a very serious issue. I've been surprised to see that we could, they're talking about having a coal regulator now. After so many years.
It should have happened many years ago.
Many years ago.
And considering that coal produces half of the electricity consumed is coal-based.
See, the coal has a very big, very strong forward linkage with the overall economic activity, particularly in the manufacturing sector. And I have written somewhere, the coal will be the one sector which would drag the whole economy down, at least 50% down compared to what it is. It's very important for the government to bring clarity. Clarity is one thing it's lacking for the
transparency.
Yes,
having a regulator which is unbiased, transparent. And after all, these are resources that belong to the people of the country.
Yeah, and also the policy reversals, not just policy paralysis. I think policy reversals is something which the markets are not able to understand what exactly the government intentions in terms of going forward. So I think it's not limited to coal alone. It's to the many of this line ministries,
this issue of, say, if we can just move on to this issue of foreign direct investment caps. You're really talking about insurance, you're talking about defense, but these require parliamentary approval.
Right.
And once again, they're politically very contentious and controversial.
Yes.
Do you expect that the government will be able to actually push through, say, increasing the FDI cap on insurance, increasing it for, say, defense, among other sectors?
So generally we predict based on the trend. Okay, if you see the recent trend, it doesn't really give the confidence that the government would be able to push. For example, GST, they already clarified that they are not able to
do it this year,
so
it'll take another year or so. Yes.
So I think if you see the recent trend, it's going to be very difficult to convince the other political parties in passing this particular. But there are some unanimity in terms of food security bill. So that we really don't know how it's going to come up.
One question we're going to discuss this in slightly greater detail, this imports of gold.
Yes.
The finance minister urging people, don't buy gold, don't buy gold. It's not the best hedge against inflation. But is this enough? Just an appeal from the finance minister will restrict the purchases and the imports of gold, considering that people kind of look on investments in gold as a hedge against inflation and because of high inflation. And the point I want to specifically ask you, the customs duties have already gone up from 6 to 8%. Yes. The Reserve Bank of India has placed certain restrictions on import. But the point is, why doesn't the government increase customs duties further. The argument is it will encourage smuggling.
Right.
We'll go back to the days where all the villains in the
Right.
Hindi movies were
Right.
gold smugglers.
Right.
But the point is it this also not a reflection of the government's inability to check smuggling of gold?
No, I think that's more to do with some kind of institutional setup that we have. And maybe it's not much, we don't have really much time in refining or improving the governance
The customs
system, in the governance
department.
system in the customs department. So all they could do is to raise the little bit from 6% to 8%. But the point is the gold, I've been, taking a position that right now it is the confidence channel that is working in a big way. So there's a negative confidence in the overall investment activity.
So you're saying until the rates of inflation come down further?
I don't think it's interest rate. I think until the government shows the seriousness in terms of bringing in structural policies, you are not going to, by tinkering interest rate, you have seen RBI has reduced the interest rate.
But it had no major impact.
Yeah, it doesn't, because there is no confidence in the markets.
Okay. Yeah. So time alone will tell whether in the run-up to the elections, when the government will be able to take tough decisions.
All these indicators actually making monetary policy more ineffective, investment policies more ineffective, the changes in
We've
FDI
actually
policies.
seen a gradual slowing down of the investment rate and, the savings rate. And in fact, in 2011-12, for the first time in India's own entrepreneurs.
Yes, and investing outside.
They invested more outside than the
even
inflows
last
of foreign
month,
direct.
we have seen a report that 1.8 billion has been invested outside by the Indians.
If only they invested in India, many of our problems could have been resolved.
Power is one. We really don't. It's coal, power, all those things.
So I need to take one more break in our program. I'm going to come back to you. This is the final break, and we'll be back with you in a very short while. Keep watching Policy Watch. Welcome back to the final segment of Policy Watch. We now move on to our final story of the week, and this is about the global credit rating agency Fitch revising India's outlook from negative to stable, and that has obviously brought a lot of cheer to the government and to economy watchers.
Fitch predicted a modest recovery in GDP growth this year to between 5.7% and 6.4%. The rating agency appreciated India's efforts to contain fiscal deficit as well as the steps to remove structural bottlenecks.
Despite a deterioration in the current account deficit, in part due to an increase in gold imports, Fitch considers India's overall external position to be a relative rating strength. Foreign debt is moderate, and RBI's international reserves, which stood at US $288 billion at the end of May, provide a cushion to absorb adverse external shocks.
The agency also reaffirmed India's long-term rating to BBB-, a notch above the junk status. The outlook upgrade is expected to help India attract foreign funds. Another credit rating agency, Standard & Poor's, had turned down India's request for a rating upgrade.
I couldn't agree with Fitch more when they say that more reforms are necessary. There are a number of decisions that I expect to be taken in the next few days and few weeks. I think that the following issues will be resolved before the end of June.
The factory output data released this week, however, reflected the fragility of economic recovery. Factory output growth declined to 2.2% in April from 3.4% a month earlier. The decline is attributed to poor performance by key sectors such as manufacturing, mining, power and capital goods. With Rupee Parsai and Krishnanand Tripathi in Delhi, Bureau Reports for Rajya Sabha TV.
We return to our discussion, Professor Bhanumurthy. How enthused should we be with Fitch, the findings of Fitch? You know, when Standard & Poor's or Moody's downgrades us or says something negative, we are not happy.
Right.
We also say that we shouldn't take the credit rating agencies so seriously because they didn't exactly come out with flying colors during the recession in the West. Yeah. At the same time, we know that because we have become so vulnerable on foreign institutions, institutional investment money to bridge the current account deficit, we have to take, and FIIs, they take these credit ratings very seriously.
Yes, you're absolutely right. Actually, if you see most of the fund managers, they have a very standard instruction that you have to invest depending on the rating the credit rating agencies are providing. So we cannot say that we'll not be taking seriously the rating agencies. Having said, the recent Fitch rating is very welcoming, because we have been arguing that fiscal deficit is one single indicator that can actually bring in some confidence into the financial markets as well as the real sector. If you see the point that Fitch has raised, I mean, they actually attributed this upgrade to the reduction
fiscal consolidation,
fiscal deficit, as well as containing the inflationary pressures.
And at the same time, Fitch has also argued that the recovery or the revival of the rate of growth of GDP would be slow and gradual.
Yes.
And also a revival of investment sentiments.
Right.
So we're not going to see any dramatic turnaround, are we?
No. Based on their assessment, we are not really going to see a very dramatic turnaround in investment cycle. But my take is that the reduction in fiscal deficit, and rather further reduction in the fiscal deficit in the current year, particularly on the subsidy side, would definitely have some strong impact on the private investment cycle.
Okay. Yeah. Thank you so much, Professor Bhanumurthy, for coming here to the studio of Rajya Sabha Television. Time alone will tell in which trajectory the Indian economy moves, and what we can say with a certain amount of confidence is that the Indian economy is going through a very difficult phase, and in the coming days and in the coming weeks, we'll see whether we're going to see an improvement, a revival. And on that note, we come to an end to this week's episode of Policy Watch. We'll be back with you next week. Thank you very much.